Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Asia as a pocket is looking slightly weak, Neeraj. SGX, no major cues. 11,900, just about thereabouts. But it's going to be interesting in a stock-specific watch today, Sun Pharma particularly.
Yeah. I mean, the world market's bothered by yields. We would be glad if the yields come off, and we are. But yeah, you're right. Today is more a stock-specific day, and more so at the broader end of the spectrum, Devina. I was looking at the results that came out post-market hours, say for Sun Pharma and maybe Oro. A clutch of mid-sized and small-sized companies that are likely to react more to the numbers, the 3M Indias, the Navkar Corps of the world. Those are probably the ones which will be very active this morning.
You know, it's interesting because everyone's talking about this big pickup because of lower valuations in the beaten down mid caps and small caps. But where are the earnings coming from? I mean, you are spotting a few here and there, but the bigger trend is disappointments in terms of earnings from the broader market space.
Yeah, so, well, out of those, whatever, 4,500 listed, majority will not gain, but let's hope that the ones which matter,
as well.
Yeah, maybe the banking names have done okay, the Federal Bank, DCB, RBLs of the world, so maybe those have. But
so your consensus trade does well.
Yeah, maybe the consensus trade does well. That's true.
All right. Let's talk a little bit more about what happens today as the setup for the derivative space. Remember, tomorrow is the monthly expiry for the month of May, so it's going to be important. Your activity will start picking up. Rollovers will start picking up. Agam Vakil joins in right now with the update. Agam.
Well, yes, rollovers have picked up, and now we are going into, well, perhaps a period where we won't have as many meaningful events as we have seen in the case of the last couple of weeks. And rollovers currently at around 40%. Of course, today and tomorrow will determine whether or not the rollovers are up to the mark and have been up to the mark. Coming down to the Nifty banking rollovers too, standing at around 38%, not too much to speak for yet. The India VIX has also come off to a certain extent, but now it's at around 16, and we are well used to it being around above the mark of 20. So these are significantly lower levels for the India VIX too. But moving on, when it comes to change in OI, it's essentially the 11,900 call, and again, on expected lines, considering that is where we saw the most amount of activity. As far as your open interest distribution is concerned, on the higher end, we are likely to see resistance around the 12,000 mark. We'll be watching out for that. And in terms of the put-call ratio, unchanged largely at around 1.27. Keep an eye on stocks which will be moving in and out of the band, considering it is expiry. Adani Power and PC Jeweler among many. IDBI Bank, however, moves out of the F&O band. We're also keeping an eye on BPCL, Wipro and Coal India. And in terms of unwinding, we're looking at stocks such as Chennai Petro, IDBI Bank again, and Adani Enterprises. So we'll be watching out for these names. But again, largely consolidation expected, at least as per the data we've seen in the derivative space.
All right, Agam, thanks very much for that. Rollovers are picking up, so watch out for that as we move into expiry day tomorrow. Gaurang Shah, Head Investment Strategist at Geojit Financial Services, is joining us on the show this morning. Gaurang, a very good morning to you. What is it that you're giving? What kind of advice are you giving clients here on? And how would you position yourself to take most advantage of the current market move that we've seen?
Thanks, Devina, and morning to all of you all. So, I think whatever we've seen post the exit poll numbers and, of course, the final outcome, this market remains a buy-on-dips market. Earnings a shade better than what we've seen, at least in the recent times. I'm talking about select sectors and stocks. And again, you know, my sense is that other than the devil in form of Iran and US, trade issues, I don't think one has to worry about. And I hope that wisdom and common sense will prevail upon leaders not to enter into something misadventure, which may lead to a spike in the crude oil prices, and that may lead to a little bit of medium-term concern for our market since we are net importers. But sector-specific, Devina, what we have advised our clients is look at specialty chemicals, agrochemicals, look at cement, select names in the banking universe, both public as well as private, select sound NBFCs, and consumption theme, despite the fact that there are concerns in the short to medium term about slowdown in consumption. But I think the long-term growth story still remains intact as far as the consumption sector is concerned.
What do we watch out for in terms of stocks? I mean, for one, Sun Pharma, what have you made out of the results? Obviously, the results for Q4 divergent from the kind of guidance that they have provided for FY20, which is more positive than the actual delivery of the results this time. So would you ignore what they've delivered and look at the fact that they're forecasting a 5 to 7% growth for FY20 and take heart from that?
So I think the numbers, like you rightly mentioned, there were no major grey areas or disappointment, Devina. But were there any triggers for the stock to look like an investable category stock? Well, fortunately, unfortunately, we do cover Sun Pharma on the positive side, but we've scaled down our targets. I think the performance after yesterday, what we saw, is likely to improve, but I don't think that's going to be anything that is going to be a screamer of a upgrade coming through. And if I'm not mistaken, couple of coverages that I've seen since morning, they have actually downgraded their target price from the higher level to a lower level. So we also maintain somewhere close to about 510 targets on Sun Pharma. But it's going to be a long drawn patience and painful period in terms of recovery and translation of that recovery into earnings. If you are stuck into it, well, you have no choice but to hold on to it with an a stretched out time horizon, Devina. But if you want to buy it, then I think there are better names in terms of performance. Aurobindo incidentally came out with numbers that looks very promising to us. Natco Pharma, Alembic Pharmaceuticals, Torrent Pharma, Cadila, Ipca. I think these are some of the names that may attract a little bit more attention in terms of investment category compared to Sun Pharma.
Gaurang, good morning. What within the Adani group are you recommending people to buy? Because those stocks have been on a tear. Adani Transmission, Adani Gas, all of them are trading very close to or at new highs.
Well, morning to you as well. I think this is only a reaffirmation of Prime Minister coming back, and before the election we saw deep corrections in the Adani Group stocks. But we don't cover the stock. We don't cover any of the stocks in the entire Adani Group. So I would rather not look at these kind of themes and look at more credible fundamentals names to get invested. In fact, if you ask me, from the new theme that we have identified post certain numbers that we saw as the alternative clean and green theme, and over there I think IGL has done well, Petronet LNG has done well, Gujarat State Petronet has done well. So I think I would possibly look at these kind of themes, including the one that I was discussing with Devina a while back, specialty and agrochemicals. Unfortunately, we don't cover any of the Adani Group companies, so I can't comment specifically.
Okay, but so Gaurang, I'll ask you in a bit about some of these specialty chemical companies as well, because a lot of them are trading at new highs too, the Vinitis, the Fairchems of the world. We'll get to that in just moments from now. But first, let me go across to our research team members to try and talk about all the key newsmakers in the session today. Sun Pharma was one, and we spoke about that. A clutch of others which have come out with numbers, good numbers, bad numbers. And then there is PNB, which stands out as well. Post earnings, there are some detailing which might impact the stock in today's session as well. So Mishika, Nikki, as well as Shefali join in for all of that. Good morning to all three of you. Can we start off with PNB first, Shefali?
Yes, absolutely. Some of the details are not going down too well with the street. One, the jet account still remains standard in their books. So technically, maybe it might be standard because at the end of Q4, it might be standard in their books, but not adequate provisioning done. And some of the banks prudently, they've classified it as standard, and they've not, as far as some of the other accounts are concerned, like DHFL, ADAG, etc. Some of the banks have made prudent provisioning for that. So they've not done that. So considering that, the provisioning still remains lower. Other than that, operationally as well, the numbers were weak, NII lower, fees lower. So that improvement that we saw in the asset quality, that is in terms of gross NPAs and net NPAs, that was not on account of better performance on the asset quality, but because of the decline in the, higher loan book. So the denominator went up. So that is why we had that decline in the gross and the net NPAs. Other than that, slippages slippages were much higher than the expectations, and higher incremental provisioning was also made on account of the RBI divergence. So on top of the 18% gross NPAs that they had reported, there is still divergence that was noted in these results. So that clearly means that the bank has been underreporting slippages. So that is not a good news. Coverage ratio, despite the inch up, still lower than some of the large peers, and the CET1, it remains at critical levels of about 6.2%. So despite the capital infusion by the government, their capital levels still remains low. So that means they will be in the dire need to raise funds going forward in this fiscal year.
Okay, so is the analyst community a bit concerned about all of these?
Yes.
Okay, the stock likely to get impacted today?
Yes, yesterday also it ended down 3.5%. So today as well we may see some impact.
Okay, let's wait and watch what happens to PNB today. The street believes that maybe there's some downside. We'll talk to Gaurang about that. Since we're talking about the bad numbers, let's talk about the poor results first, then we'll talk about the good results.
Okay, three of them that I'll be addressing. First is Shalimar Paints, where the top line growth of the company looks good enough, but if you look at the bottom line performance and the operational performance, there's a decline out there. Revenue up by 48%. Net loss for the company has just widened to 43 crore as compared to 16 crore in the corresponding quarter. That mainly comes on account of the decline that we've seen in the operational front. EBITDA loss of the company has widened to 35 crore as compared to a loss of 10 crore, mainly on account of higher other expenses, which have gone up by more than 2.5 times at 40 crore as compared to 14.5 crore in the corresponding quarter. Besides that, we've also seen some escalation coming in the raw material cost, and in the bottom line performance we've also seen exceptional loss of more than 11 crore, mainly on account of damaged inventory. Net all of this has weighed down on the performance of Shalimar Paints. We might just see a negative reaction on account of this. Aircore International, weak set of numbers where the top line is flat for the company. The net profitability has declined by more than 55%, and the operational performance too has slipped by 32%. Apart from flat revenues, it's the higher project expenses which have weighed on the operational performance of the company. Add to that lower other income, and we see added pressure on the bottom line performance of the company. 3M India, again, poor set of number. You look at the top line, it's a flat growth there. Operational performance too has seen a decline of 4.5%, and we've seen a sharp decline coming in as much as 40% for the net profitability. Higher depreciation and lower other income, besides the flattish revenue, overall has weighed down on the numbers.
Okay, so well, some of these might see negative reactions as well. PNB one, then Shalimar Paints, Ircon might be in focus too. Well, we badly need some good news, Mishika. What are the good numbers?
Yes, I will be taking you through all the companies that put up a good show in terms of their quarter 4 results. The first one being NMDC. Their revenues were down 6% to 3,643 crores. Their net profits up 32% at 1,454 crores. Steep decline in employee expenses, royalty and other expenses mainly added to the operational beat of the company. Then we have Aurobindo Pharma. Their revenues are up 31% at 5,292 crores. Net profits up 11% at 585 crores, aided by a significant increase in the US and Europe revenues. Their EBITDAs are up 32% at 1,060 crores and margins are flat at 20%. The board approves amalgamation of its 6 arms with itself. Then we have SML Isuzu, which also posted a very good result. The revenues are up 17% at 429 crores. Net profits are up 48% at 22 crores and EBITDAs are up 68% at 41 crores. Their margins stand at 9.5% versus a 6.5% last year. There was an inventory gain of 70.4 crores in the base quarter, and the good sales numbers have mainly aided to the top line of the company.
Okay, we'll watch out for some of these as well. Shifali, you want to make a quick mention about Laxmi Vilas?
Well, yes, a poor set of earnings continue from the bank, so probably could be, final set of cleanup happening, if at all that merger happens. But nonetheless, it's a very poor set of earnings with their credit costs being elevated, the NPAs inching up. Operationally, the numbers are weak. Operationally, at an operational level as well, they've posted a loss apart from the overall loss number of about 1,556 crore rupees. So overall bad set of earnings from Laxmi Vilas Bank.
Oops, we'll watch out for those as well. So more bad news than good news today, but thanks all of you for joining in and giving us those perspectives. Gaurang, two names out there, if you track them and if you looked at the numbers or the surrounding events, Punjab National Bank and the disclosures that came out post the press conference yesterday, and or Laxmi Vilas Bank and the kind of numbers that they've come out with.
Well, so Laxmi Vilas continues to be a howler of a number, if I can say that. And I think it's a tremendous drag on the balance sheet, not only on this quarter, but if you look at the last, multiple quarters, this has been a pure, underperformer. And the only reason why these kind of valuations are given by India Bulls Housing Finance is for the banking license. And I think that's a too high price to pay, given the kind of, huge underweight or extra overloaded balance sheet with respect to the assets issue, provisioning, and of course NIMs and profitability. We don't cover such banks. I think there are more credible names to cover in the banking universe. So I would rather prefer a federal bank, compared to a Laxmi Vilas Bank. I'm sorry, which was the other one?
PNB, Punjab National Bank.
So yeah, this is one name. Yeah, so this is one name that we remain positive, but the only issue is that the recovery is visible and that may take a little bit of longish time. If you are of an elevated risk appetite and if you are a die-hard fan of public sector banks, and of course you have a time horizon of maybe 2 years and more, then I think lower levels are quite restricted for Punjab National Bank after the numbers that we saw. So we're maintaining targets of somewhere close to about 98 initially, and in case if the earnings improve the way we have seen, then possibly the targets may get scaled upward, but that will all depend upon how the numbers unfold for the coming quarters. But as of now, 95 to 98 cannot be ruled out.
Okay, so that's a decent enough upside from the current levels of about 86. Mahindra and Mahindra reports numbers today. Gaurang, what are you expecting?
So Devina, I think one of the biggest concern and drag for M&M has been the limited offering of products as far as the passenger vehicles are concerned. Yes, you have, disappointing KUV 100 numbers. Then you had a new avatar being launched for TUV 300 in terms of, the high-end version that we saw, which was competing against Vitara Brezza. The top-end model is also not really doing much. And in terms of commercial vehicle, there has been slight bit of improvement. Tractor has been a drag. So my sense is that, yes, we do like the stock. And of course, not to forget, Devina, you have the great migration happening from BS4 to BS6 in the next couple of months. So you will have, capital investment in newer products, newer technologies, newer engine, newer platforms. We like the stock, but purely from a 2-year plus time horizon. And I expect the management commentary to throw light on the product offering in terms of new launches. And of course, how are they dealing with the migration process from BS4 to BS6. We remain positive with targets close to about 740 as of now, but all depends upon what the numbers tell us later on in the day.
All right, that's Mahindra and Mahindra. Numbers will come out later in the day. We'll see what they do in terms of margins as well, because that's one sore spot for most of the passenger vehicle makers. Whether it be Maruti, we'll see what happens, even to some of these two-wheelers that we've seen. The recovery path is going to be a treacherous one. So let's see how that happens ahead of BS6. But a few other names, we'll get to that with Gaurang in a bit. But let's bring in our technical experts. Chandan Taparia of Motilal Oswal Securities is joining us on the show, along with Hadrien Mendonca, Senior Technical Analyst at IIFL. He too is here with us. Let's start off with you, Hadrien. Your call on the index first up, 11,900 odds around there. About what would you do? Would you go fresh long?
Yeah, hi, good morning, Devina. So, since the election verdict day, I think, the Nifty seems to be stuck in this 430 points trading range. So, the Nifty has yet not been able to break past the top or either the low of that important day. So, I think going forward, I would turn completely bullish only if we see a break above the 12,070 mark. Till then, I think the 11,640 levels is going to act as a very important support on the downside. So there is a lot of shift happening from the index or the large caps, if I may say, to towards the mid caps and small caps. So that is where a lot of action is currently. So focusing on the mid and the small caps would be much more fruitful currently.
All right, so not taking any index strategy as of now. But Chandan, what are you doing?
Yes, comparatively, the market has seen the strong momentum in last couple of trading sessions. It made bottom near to 11,108 and headed towards 12,041 kind of level. But in last 3 trading sessions, we have seen that supports are slightly shifting higher. Even we are having hurdle at higher zone. Market got stuck in a trading range of wider swing day of election event day. But supports are gradually shifting higher. So till it holds above 11,850, we'll continue to be with bullish bias and expecting it to hit towards the upper band of this trading range to hit the new lifetime high of 12,000 to 12,041. So here bias is continue to be bullish till it holds above 11,850. But again, we believe some pause and positive momentum could be there, and stock action could continue to be in the street as well.
Okay, so what's the stock specific action that you feel traders could look at from a short to medium term perspective? Chandan.
Yeah. So now selected to go with the counter, which are turning from the support zone or giving the breakout. So first is buy on Infosys. We have seen put writing activity and built up of long position in the counter, and 700 is the multiple support for this stock, which is working well from last couple of months. In fact, on the last trading session, we have seen the strong momentum with the jump in the trading volume, and it surpasses falling supply trend line by holding above 50-day exponential moving average. We have seen positive crossover in most of the mechanical indicators. So recommending to go long on Infosys with stop loss of 710, and here we are expecting a rally to us 760, 765 kind of level. Second trade, we are recommending to go long on Kajaria Ceramics. The stock has surpassed its falling supply trend line on the weekly scale. We have seen the formation of 2 strong bullish candles, and the mechanical indicator are also holding with built up of long position. So recommending to go long on Kajaria Ceramics because of its breakout, and expecting it to head to us 675. One can buy with a stop loss of 628 zone.
Okay. Interestingly, Infosys is one stock that many of our technical analysts are getting bullish on. Yesterday, with Sajitanand Thekar, in countdown, and he too, in the last half an hour of trade, decided that it was Infosys that he wanted to go with, and that stock looks interesting from a short to medium term horizon. Hadrien, what are you doing in terms of individual stocks?
Yeah, so I have a sell and a buy. So I'll go with the sell first. So first, the stock that we are slightly bearish in the near term is Godrej Industries. I think the stock has seen a very significant rally in the past 7 to 8 trading sessions. But if you look back in the past 2 days, I think there is a drastic slowness in the momentum that we saw. There is also a hanging man pattern, if I may say, which low has been broken in yesterday's trade because of the sharp sell-off that we saw in the stock. We are also seeing a rising wedge pattern breakdown, and it is also failing to surpass its 50-day moving average. So all these parameters actually indicating that we could see some kind of further decline in in the stock. So one can consider going short on a Godrej Industries May futures. We are expecting a target of 470, keeping a stop loss at 485. The second stock that we are bullish on is an Infosys. So there is a clear shift of preference for the IT stocks in the past 2 trading sessions. So we are seeing good momentum not only in Infosys but even TCS, Tech Mahindra, HCL Tech. So Infosys looks the better pick out of all the 3, and we are seeing first of all a falling channel pattern breakout with very huge volumes that we saw in yesterday's trades. So Infosys could be a very good short-term bet in my opinion. We're expecting a target of 753, keeping a stop loss at 716.
Okay. Those are some stock recommendations from both our technical experts. On to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we are looking at JSW Steel and the trender indicator, which is the proprietary Bloomberg indicator, that has given a positive signal and a buy signal coming in on JSW Steel. Now, as we do always, let's first try and understand what the trender indicator is and how do you interpret it. It is a proprietary Bloomberg indicator, and it uses the help of the average true range for the purpose of calculation, and it helps generate a buy and a sell signal as well as manage your stop loss. How do you interpret it? You go long when the trender line flips its color from red to green, and you go short when it changes its color from green to red. In the case of JSW Steel, we've had the stock managed to close above the trend line, which is the red line over here. We've had a series of down low moment for JSW Steel. It went from green to red back in September of last year, and since then it has fallen from the mark of almost 450 to as low as 250. But since then, over the last 5 months on a year-to-date basis, the stock has been largely consolidating in the 250 to 300 mark, and now very close to that upper band, which is close to the 300 mark. We saw that the stock has managed to close above the trend line and has given a positive crossover. So the stock closed at 292.95, which is close to 293, and the trend line is at 292, and that is when the condition got fulfilled and the trend line has flipped its color from red to green. Also, on the longer term time frame, we are looking at the weekly charts for JSW Steel, and again a positive multiple triggers which indicate that there could be a positive move for JSW Steel. Now the RSI, that too, after the stock came down to as low as 250, it took support near the oversold mark, which is close to the mark of 30, and then has bounced back. It has given a bit of a cool off in the last few trading sessions, but then it has again bounced back, and the RSI too has given a positive divergence. On the lower panel, which is the MACD indicator, we've seen a positive crossover happening here as well. So the MACD, the RSI, both are suggesting that there could be a positive move. And lastly, on the price chart, the yellow line over here, that is the 55-week exponential moving average. That is very close to where the top of the stock has been in yesterday's day of trade. Shouldn't manage to take out, and as we've seen historically, the stock is primed to move higher from here on.
Well, okay. So it's worked historically well in the past, and it looks like it could show some positivity today as well. Yash, thanks so much for putting that into perspective. Let's wait and watch for those, all of those names. Now, one pocket, both technically and fundamentally. Now, since we're on the topic of charts, let me first get the charts out and then ask Gaurang about these specialty chemical companies. Hadrien, to you first. 3 or 4 names which have been hitting new highs on the charts. Deepak Nitrite, Vinati Organics. Aarti was a bit subdued yesterday, but otherwise has done well in the last 3 or 4 sessions. And I'll throw in an SRF too. So 4 principal names which have been right at the forefront of the rally in the specialty chemical companies. Which chart looks the strongest?
I think Vinati Organics is something that is a very, very solid trending stock. That does not mean that I'm denying that Deepak Nitrite and other names that you have taken are not looking good. But Vinati Organics definitely is looking very, very strong. We have seen a very, very strong breakout on the daily charts as well as the weekly charts. There's a clear extension of the higher top, higher bottom structure, which really indicates that this momentum can get extended even further. So I think I would prefer a Vinati Organics currently. Quoting somewhere close to 2010. I think going forward we could see the stock moving beyond the 2100 levels as well. So Vinati would be the preferred one.
Okay. Gaurang, you mentioned this, that specialty chemicals is a pocket that you guys like, you like personally as well. There are lots of names which are doing good. How does one pick 1 or 2 names? What is your favorite name within that pocket? And why?
So you are spoiled for choice over here as well, and I will broadly jot down the names that we are positive. So I'll start with Aarti Industries, Vinati Organics, PI Industries. We have also, widened our scope over here. So we've included UPL and Pidilite as well. And of course, you have the tailwind positive news in terms of a rejig of business as far as Tata Chemicals is concerned. So these are the names that I am extremely positive on. And if I have to possibly look at maybe 1 or 2 names, then in terms of numbers that have come out and the scope of widening and improving the business and earnings, then UPL and Pidilite would be the names that I would possibly be looking at. And they have also been some silent performance in terms of return over the last year or so.
Well, interesting. Yeah, UPL has been hitting new highs too. Pidilite adhesives business doing well, but yep, watch out for this specialty chemical pocket. Certainly revving up on the charts the last few days or weeks. Gaurang, actually, we'll come back to Gaurang after the pre-open session because as we said, there are a lot of stocks which have come out with a rather poor set of numbers and would want to discuss some of those as well. Mind you, while Sun Pharma is the principal poster boy, there are companies like Shalimar Paints, Chand, 3M India, all of these came out with a poor set of numbers. Navkar Corp, Asian Granito. So the numbers don't look all that great for some of these, and maybe, just maybe, we'll see some negative reactions or some of those. So let's wait and watch, and Make Money Organics would be in focus as well. Let's wait and watch what happens there. But principally Sun Pharma, Aurobindo Pharma, both came out with numbers, divergent numbers, but in Sun Pharma's case, divergent numbers and the outlook as well. So interesting to see what happens today.
Yeah, and Gaurang actually prefers the Aurobindo versus the Sun Pharma as per his conversation earlier on. 30 seconds left to go for market pre-open. Asia as a pocket is not suggesting that we might have a big blowout of an open. In fact, subdued, marginally negative. 16 odd points given up on the SGX Nifty. 11,912 is where we are currently at. Rest of Asia is down. I think Japan is down more than 1%, while China trades down marginally. Aside from that, like Neeraj highlighted, it's going to be Sun Pharma from the index. That's going to be an interesting watch. And the rest of the pocket, remember, we've been seeing interest coming back into the likes of a Yes Bank over the last 3 or 4 trading sessions. Whether it can carry on that momentum. And L&T started to see some profit taking yesterday. Nifty 50 up on your screen, about a quarter of a percent, a third of a percent higher. And L&T is the stock that's at 1575 now. Remember, it had nudged almost 1600 from there. It came off a bit. Yes Bank continues to do well, so 154 now. I think it had gone somewhere closer to about 132, 133. From there, it's been a good recovery for Yes Bank actually. Aside from that, you've got the likes of a Bajaj Auto, which is up 0.5%. Ahead of numbers, M&M is also up, so closer to 1% higher for M&M. 675 is where the stock's trading at. HDFC Bank continues to go strong. 2,440. GAIL is your top performer this morning on pre-open. It's at 353, followed by Bharti Infratel, which is at 272. Amongst the losers, I think Infosys is also up closer to 1%. Remember, this is starting to become a favorite now for traders. Z is down about 2.8%. It was up about 3.5% by the time we shut shop for trade yesterday. Looking weak in today's pre-open. Dr. Reddy's is down 1.75%. ICICI Bank 429 on the stock, looking weak. For the currency, some more weakness, 69.68, so 10 paise weaker than yesterday's close. 69.68 was yesterday's close. And the bond market yields also will come up on your screens, and it has softened further, 7.14.
The Indian market should be happy, world markets aren't, so keep that at the back of your mind. Okay, Aurobindo Pharma, just one stock that I want to highlight from the large cap space. There are a clutch of mid caps and small caps that may be doing worse off. Aurobindo about 1% higher, and maybe Shalimar Paints or a Navkar Corp or a 3M India, slightly liquid names, but maybe some of these could be reacting. But we'll give the pre-open rates a chance to settle before we talk more about some of these names. Let's first get in Nikki Mirchandani Johnson right now with the top brokerage calls of the morning. Nikki, good morning yet again.
Hi Neeraj. Well, CLSA has come down with a note on cement industry where it suggested quite an optimistic outlook overall for the industry. It's hiked the rating as well as upgraded the rating as well as hiked the target price for Dalmia Bharat. From upgraded the rating to buy from outperform, and the target price has been hiked by as much as 200. Now it stands at around 1,500 rupees. For India Cements, it has maintained the buy rating but has hiked the target price to 135 as compared to 115 previously. It says that the exit prices remain higher for Q1 FY20, and also the quarter as a whole has been blockbuster for the entire cement industry given the pricing power. But then it also suggested that there have been higher discounts given in the last 2 weeks due to the weaker construction activity. With election behind now, a clear picture should emerge overall for the industry as a whole. Capacity expansion, the brokerage says, is not viewed as a a big concern in the medium term at least. The next note that we have is Investec on Vedanta, where it's initiated a buy with a target price of around 233 for the counter. It has suggested a strong diversified play, and it said that the management delivery, however, remains to be important. Stated dividend policy is positive and capital allocation priorities are encouraging for the company right now. Valuations look attractive and it restores monetary confidence as a key for Vedanta.
Well, okay, so some commodity names and cement in particular. I'm not surprised. A lot of people, Nikki, thanks so much for, of course, putting that into perspective. A lot of cement names have been revving up. Forget the large cap ones. I was looking at a small cap name, Sanghi Cement. Didn't come out with the best of numbers, but after going down all the way to 57 or 58, is now at 71, 72. So the last 1 month, even this one has done extremely well for itself. So a clutch of these cement names are doing rather well for themselves. Chandan, Taparia, purely on the derivative positions, or maybe if you look at the charts of some of these, any cement name that stands out for a trade?
Yes, in fact, we are witnessing built-up of long position in most of the cement counter, and the data setup suggests that most of these stocks are likely to do well even in the June expiry as well. We are suggesting to go long on Ultratech, Ramco Cement, and in fact the SEC also has seen the buying interest or support-based buying could be there as well. So Ultratech is a name where we have seen significant price action with the jump in the trading and the delivery volume. Rollovers are also increasing. It has surpassed multiple hurdle of 4500 zone, and recently it exactly started the movement from the previous leg of rally. So expecting the rally to extend to us 5000 slow and steady. So any decline is the buying opportunity in the same. Apart from that, we have seen buying interest in Ramco Cement. Ramco has seen the built up of long position by around 20-25% and has been making higher highs, higher lows. However, it has rallied well by around more than 100-120 points. So a small dip could be again buying interest in the counter for a fresh leg of rally to us 850 zone.
All right. Infrastructure is a pocket, Gaurang. While we've been hearing a lot of commentary about how this could be the next big lead that could come in on the back of government spending. So far, what have you made out of the results that have come out from most of these players? You've got IRB Infra also that just reported numbers in line with street expectations, no big bang moves. But do you feel that the next leg of growth could be this sector?
Well, so, Devina, IRB, of course, we don't cover, so I can't comment on the specific, but infra is something that we are equally excited about. And if you actually go into the commentary that was given out, or the verbatim that was given out when Prime Minister Modi was doing all those rallies before the election and during, of course, the various phases of election, then there is an elaborated need to modernize the existing infrastructure, at the same time build new ones. And that is more important, because if you have to scale up from your 7+ GDP growth rate to 7.5 and 8 and beyond, then you desperately need to spend on infrastructure. And we believe that all those policy or decisions that were taken with respect to Bharat Mala, Sagar Mala, Udan 1, 2, 3, Pradhan Mantri Awas Yojana, Pradhan Mantri Sadak Yojana, affordable housing for all. And cement definitely will do well, including cement. I think metal will do well, and even infrastructure companies. So we like PNC Infra, NCC. In fact, we have scaled our target upwards to about 145, post the numbers, NBCC, Sadbhav Engineering. And in case if you are looking at a diversified, very strong bet with great corporate pedigree, then L&T should definitely be on the radar.
Any thoughts on Reliance, Nippon Asset Management? I mean, there are only virtually two pure play listed asset management companies. There is maybe a Motilal Oswal which has that business, or IIFL which has that too. But between the two, now that it's been hived off and it'll be Nippon Life, can it catch up on valuations?
Neeraj, it beats me, and it always makes me wonder more whenever it comes to ADAG group stocks, unfortunately. Why would I go and put my money or invest my money on hope of a recovery, etc., etc. There are better places.
Gaurang, because it's no longer an ADAG group company, right? They are hiving it off.
Yeah, but that does not just need to be the reason, Neeraj, because ADAG group is not there now you should go and buy it. The flavor or the credibility will depend upon how the earnings are going to evolve, and that may take a little bit more time. So instead of waiting in vain, I would rather look at some of the established players in this particular sector. And if I have to put my bet into one of these names, then I would definitely go in for an HDFC AMC, which looks quite promising. And after that 2% cap, the stock corrected to 1200 and has recovered very smartly. And I think there is a huge scope to do business over there. Even ICICI Prudential is something that we are extremely positive on. So I would look at these kind of names.
Okay. Chandan, Taparia, I want to come to you with an ICICI Bank, a really strong up move that we've seen in the counter over the recent 1 month. Would it be time to take some money off the table?
Yes, ICICI Bank has seen the strong momentum. Recently, it has taken support near to previous swing resistance of 375 and surpassed the multiple barrier of 410 12 levels. However, already it has seen the strong momentum, but again, the trend is intact. In fact, on the last trading session, we have seen the sharp spurt from the lower levels with significant jump in the delivery volume. So momentum could continue and expecting it to head towards 450 kind of zone in coming trading sessions.
All right, that's not bad. Remember, the stock has come off and moved pretty sharply from those levels of 360, 370 that it was trading at a few months ago. And this has been a stock that everyone has favored within this space, considering that at that point it was relatively good in terms of valuations, but now with this run up it could probably still be borderline expensive.
Yeah, I mean, relative to maybe Axis, etc. I think the story would be that whether you believe Axis will be the first one of the block and is that a better buy, or ICICI Bank could be. But as one of the guests that stated that since he doesn't want to quite place a bet on which one will do better, he's going out and doing a bit of a basket buying in the corporate facing banks in the strictest of senses. But let's wait and watch. Devina is right, the valuations relatively have certainly inched up. 428 would be near about the 52-week highs for ICICI Bank. However, just minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, Sun Pharma misses estimates in Q4 as India business falters and the drug maker takes a one-time hit for its distribution business.
However, its peer Aurobindo Pharma registered solid growth, but MNC Pharma major Pfizer India posted muted results.
In other earnings, NMDC puts up a strong show, whereas IRB Infra and Team Lease ended up in line with what analysts were estimating.
M&M and Power Grid will be the two nifty companies that will be reporting their Q4 results today.
Watch out for Care Ratings and downgrade of Aksh Optifibers due to the ongoing delays in debt servicing and certain issues with letter of credit.
Lastly, Great Eastern Shipping will consider buyback proposal on the 1st of June.
Okay, Manpasan is still locked on a lower circuit, doesn't surprise, down about 10% as the pre-open rates have settled. Gati and Snowman Logistics, well, logistic players, all cargo too is up, so certainly something revving up in logistics, that entire bucket. So Gati, Snowman, all cargo, VRL, Aegis, that entire pocket is doing very well for itself. Hadrien, on the charts, anything within the logistic players?
I think the name that you've missed is the GDL, Gateway Distriparks. I think the stock is placed pretty well. It is actually coming out of an inverse head and shoulder pattern breakout on the weekly charts. If the stock manages to sustain around the 150, 152 zone on a Friday's closing basis, I think definitely the traders that have a perspective of 2 to 3 months should get in the stock even at these levels. I think the inverse head and shoulder pattern projection is indicating a very conservative 10 to 12% upside from here on as well for a GDL. So I think I would prefer a Gateway Distripark and a close above 150, 150 on a Fridays. End of the day, end of the week could actually see a very good up move on the stock.
Well, keep in mind, I think a lot of these sectors will move around based on news flow, which the market might perceive will be positive. So I reckon what's doing the rounds is that the Commerce Ministry is planning a separate logistics department now. Does that mean that there is merit in buying these stocks? No. Now, again, this is presumption. Maybe the stocks have gone up because of that, but there is no other reason for the whole pack to be up in the session today, because all of these stocks, without an exception, are doing well for themselves. So, well, that's probably one reason, but don't know if it's a valid.
Maybe getting Gaurang's comment here. Gaurang, is this a pocket that you would be interested in?
So we all know what happened to this sector just before the GST was going to get implemented. I think there was a lot of hue and cry, halla bulla, about how these logistics sector stocks will do extraordinarily well post the implementation of GST. And look what has happened, Devina. Since the implementation of GST, these have been actually a drag and have underperformed to their valuation compared to what they were during the run-up that we saw before the implementation of GST. So we do remain positive on the sector, but we will stick to the niche and marquee names, maybe Blue Dart, Container Corporation, Transport Corporation of India. I think these are the three names that we covered. But these are purely on the fundamental side and in terms of performance. And I strongly believe, Devina, that possibly it is now time to see a little bit of consolidation as well in the logistics sector because there are one too many players.
Okay, got that. Quick take, Hadrien, on Larsen and Tubro.
Yeah, so L&T, I think previously when we had a chat on L&T, it was actually a very, very good buy, and the stock has actually done pretty well in the past week. So I think, the momentum is really there. On the weekly charts, the breakout has actually happened and, also confirmed the same. The trend is absolutely solid and, the higher top, higher bottom structure has resumed once again. I think, on the overall basis, the stock is very strong, but I think currently we are seeing a little bit of profit booking that could lead the stock into a phase of consolidation. But I think after this, few days of consolidation, definitely L&T would again resume its uptrend, and I think there are no doubts that L&T has a potential to move towards the 1650, 1670 levels going forward.
Chandan, your top call for the day, quick 10 seconds. Chandan, your top call for the day, quick 10 seconds.
Yeah, Infosys and expecting the rally to extend to our 760 zone.
Okay, so Infosys, do watch out for this one. It's turning out to be a consensus trade for most people. Let's wait and watch what happens there. But here's how the markets are starting off this morning, this Wednesday morning. We'll have a start which is maybe flattish to marginally in the red, and that's how we're starting off. The Nifty Bank, about 1/3%. Keep in mind, we had a similar start in trade yesterday for the Nifty Bank, which started off about, well, anywhere between 75 to 100 points lower. But at the end of the day, slightly differently. At least the Sensex and the Nifty did, which are also starting off flat. And the mid caps and the small caps should come up on your screen, and let's see what those indices are doing. Flattish in the session today. A mid cap index about 1/4% lower. The small caps, marginally green, but flattish in trade. Okay, let's get the heat map. Not much happening on the indices. Let's see what's happening to specific stocks. Sun Pharma doesn't react too negatively, but it's very, very choppy and volatile right here somewhere. Okay, very, very choppy now, moving into the red as well. So bobbing between the red and the green is Sun Pharma. HDFC about close to 1%, but that's about it. Small gains for TCS, but the only heartening thing is that IT is not correcting in the session today. It doesn't look like correcting in the session today with what TCS and HCL Tech are doing. Bharti, about a couple of percentage points lower. Z, after that big move yesterday, is down about 1.5% in the session today. Vedanta, we spoke about it on the brokerage verdict as well, about 1% lower. UPL marginally lower, but no, not much happening on the index. Stocks are very, very flat. In all probability, you could argue that the takeaway this morning seems to be, at least on the index on open, that HDFC Twins and IT are helping the index in a small way. Maybe the broader markets are more active, so let's shift focus there. Let me point out a couple of pockets that I thought were important. Firstly, stocks that were hitting new highs yesterday within that specialty chemical pocket. So Atul Limited, Vinati Organics, Fairchem Specialty, all of these are trading almost at fresh highs. Fairchem certainly adding on to the gains that it had yesterday. What about stocks that have come out with a poor set of numbers? Let's bring some of those. Shalimar Paints about 2.5% lower. S. Chand 8% lower. And 3M India, very high quality stock, good pedigree, but the numbers left a bit to be desired, and the stock is down about 7.5% in trade. Well, I'm guessing the broader markets is where the action is, Devina, because even the others are correcting in trade today.
And a few other numbers then. Himmat Singh Seed reported his Q4 numbers, saw net profits dipping about 3.8%. Stocks marginally higher in trade. KDDL is the other one from the broader market space that reported a dip in net profits, 59% drop. Stocks opened lower in the session. IRB Infra, inline set of numbers. Net profits were down 13.2%, while the revenue grew by about 40.9%. Stocks up almost 1%. And then you've got the likes of an NMDC and Team Lease. Both these numbers came out yesterday as well. NMDC is up 1.5%, good set of numbers. Team Lease also up about 0.5%. Aside from that, Manpasand Beverages continues to be locked on lower circuit. Today it's down another 10-odd%. So 50% given up in 3 trading sessions. For 1% beverages at 63 now. You've got Equitas, which is lower, down by about 3.7%. Ujjivan also follows that, it's down about 3%. Laxmi Vilas Bank, it was a disappointing quarter and the stock's down 2.7%. Gujarat Alkalis is down 2.25%. Future Consumer at 46 is also trading under by about 2-odd%. So this morning's open is slightly more in the favor of the bears rather than the bulls. Even in the broader market space, 600 stocks have declined, 500 stocks are advancing. So pretty much an even heel out there for the market breadth.
Okay, just very quick thoughts. Hadrien, we didn't take your top call for the day. That and if anything else that stands out for you.
Yeah, so I will continue to be of the view that we could see a little bit of sideways move on the index, and as focus shifts towards the mid caps and small caps, until and unless the 11,840, that is a very important short-term support. Any kind of longs that are actually any kind of traders that are long on the Nifty currently, 11,840 turns out to be very important support. If it cracks below the same, I think this bout of consolidation or weakness could get extended further. So a strict stop loss on Nifty long around 11,840.
Okay, and Chandan, you already gave us your top call, which is Vodafone Idea. Before we thank you, anything else that stands out for you?
See, I think we'll focus on Infi and TCS, and I think these stocks are likely to do well comparatively. So I'll continue to be in most of the IT counter and expecting most of these stocks to do well for the day.
All right, gentlemen, thank you so very much for joining in this morning. Hadrien as well as Chandan, really appreciate you taking out the time. Mahesh Nandurkar, India strategist at CLSA, is joining us on the show this morning. Mahesh, a very good morning to you. Didn't really get to speak to you at the time of the election verdict, but obviously that would have brought a smile to your face as well as the rest of the investing community. But what is the call at CLSA now that we've got the election verdict out of the way?
Well, we definitely believe that this is a big sentimental booster, the election outcome for the foreign investors as well, as the domestic investors as well. So my sense is that this should mean that the flows should continue to be in the positive territory. Clearly, India is looking like a very attractive bet if you compare with the other Asian markets or in the other emerging markets in general. So that's clearly a point of attraction from the foreign investors' point of view. We have seen some inflows from the foreigners already in over the last 1 month and broadly over the last 3-4 months in general. But I think there is clearly a scope for more to come. And what is really heartening to see is that despite this recently concluded MSCI rebalance, which was supposed to take out more than $1 billion from the passive funds out of the Indian market, that was more than compensated by the inflows from the active fund managers. So I think that event is definitely quite reassuring. So I would say that we continue to stay optimistic on the market. Although I would say that the returns will be capped because of the fact that the valuations are clearly at the higher levels compared to India's own history as well as the other emerging market sort of comparables as well. At the same time, the economic reality is not as buoyant as what the market sentiment be like. So I would by and large say that we should be expecting say single-digit market returns. So still in the positive territory, given where the sentiments are.
I'm looking at your recent note, and while we're talking about the excitement around the election verdict, there are some indicators which are still suggesting that there is an imminent slowdown. I mean, we've taken a look at the consumer activity, weaknesses continued there. Auto sales across segments were down in double digits. For the last 6 to 9 months now. Domestic demand like imports have also been down year on year for the last 6 months. So each of these points and triggers are really not pointing to a market picture that is very conducive.
That's absolutely right. So as I said, we are clearly going through a phase of consumption slowdown. And thankfully, some of the other more investment linked indicators like the cement demand growth, the steel demand growth, as well as the foreign capital flows, all those 2-3 are in the positive territory or in the optimistic territory. But yes, the consumption indicators are definitely not looking up, and my sense is that I think that's a big change that we would be looking forward to in the next 3 to 5 years as compared to the previous 5 years, in the sense that if we are expecting the investment cycle to improve, then it has to come at the cost of something. So my sort of personal belief is that the consumption expenditure, the private consumption expenditure as a share of GDP has peaked out, and if we expect the savings to improve and if we expect the investment cycle to sort of kickstart, then it has to come at the cost of consumption trend slowing down. So I think that's something that we would be looking forward to the next 3 to 5 years. That probably consumption parameters are not going to remain as strong as what they have been in the last 5 years.
You spoke about cement and steel, and some of the construction indicators: steel consumption 6%, cement production 15% for the month of March. That's a reasonably good number. Would you believe that these pockets will become pockets of interest for some time now? I mean, maybe for the next year or so?
I would definitely say cement is looking very attractive in my view. After a long period of time, we have started to see the cement pricing improving. The volume growth has been quite robust, as we have been seeing now for the past 6 to 7 quarters. And our house view is also that we would be looking forward to a housing market recovery going forward, and clearly cement is one of the key inputs for that, as nearly 60% plus of the overall cement demand goes into housing. So putting these two things together, I'm clearly very optimistic about cement for sure. On the metal side or on the steel side, it's more of a global cyclical, and if you are looking at the slower trend in the demand growth globally, also the US-China trade war impacting possibly growth outlook in China as well. And I think the benefit of capacity closures in China has already played out to some extent. So my sense is that metals is being a global sort of variable, and where the demand supply dynamics is not looking that optimistic, that part is something that I would still stay underweight on.
Mahesh, good morning. Neeraj here. The other big piece is what happens to the Indian markets and whether they fall in line with global markets. And the global markets seem to be worried with the falling yields.
Yeah, that's true. So, Indian markets will definitely be linked with, what happens globally. And, as I was mentioning, if the foreign flows, are going to be a big factor going forward, then what happens globally, becomes even more important. And, you're right. I mean, one of the factors that actually tempers our enthusiasm, on the Indian markets is what's happening globally. And clearly the near-term worry is the possible escalation of the US-China trade war. Also, there have been some sort of growth concerns in the US and the European markets as well. Although some of the recent data actually shows that the European data is showing some signs of improvement. But yes, I mean, if we continue to see the the risk appetite with the global investors reducing because of the trade war related concerns, then India is definitely going to be impacted for sure.
So Mahesh, what do you do in such a scenario? The one leg of the economy, which is consumption, is looking uncertain, as you also alluded to. Two, the global markets, aside of the trade war fears, etc., the yield effect and the fact that in the past it's been an indicator of some recessionary moves is right up there, and valuations in India aren't exactly kind. What's the case for going out and putting large fresh money to work? Does one do that in a staggered fashion? Does one wait for a pullback, or ignore that because earnings in all probability will make a comeback? What is your prime thesis?
I think staggered manner is always the right approach, and obviously the in thing these days is the SIP, which I personally believe is the right way to go. But I think we clearly need to take sectoral bets. So as I said, what has worked in the last 5 years is not necessarily going to work in the next 5 years. And in terms of the portfolio allocation, what continues to look pretty good to me is the financial sectors. Within that, the corporate banking space, where the NPLs have peaked out, the provisionings have also peaked out in my view. So over the next couple of years, we are going to see blockbuster earnings growth from the financial space, especially the corporate-oriented banks. So that one space clearly looks very attractive. The valuations don't appear all that stretched. In the non-banking financials, I would say, on NBFCs as a category, I would still sort of remain cautious and kind of limit myself to, let's say, the top 1 or 2 housing finance companies, which is who would be the relative beneficiaries of the ongoing, concerns on the NBFC liquidity front. Then, as I said, cement, property developers. We also like select capital goods and the infra EPC companies. Some of the sort of PSU names in the oil side are looking attractive. Also, some of the names, on the internet, related themes. I think telecom sector has battered down quite a lot. So some names over there are also beginning to offer value in my view. So these are some of the sectors that we clearly like. And we would be owning these as against, as I said, staples, autos, NBFC, metals. I would also be going underweight on IT and pharma. So I think it's the time we choose sectors. The broader market may not necessarily give sort of very strong returns, but I think some of these sectors and stocks can still give double-digit returns.
Just highlight why you've chosen telecom as one of the sectors that you believe can do well, Mahesh.
See, the primary reason, for that is, a large amount of industry consolidation has already happened. We've clearly seen the new entrant which has come in has gained large amount of market share. Possibly, I would say the competitive pricing wars, the end to that is sort of, sooner rather than later. And some of the companies in the sector we've seen have deleveraged through the rights issuances. And, we have also seen recently some of the low-priced plans have been discontinued. So my sense is that the ARPU in the sector has probably bottomed out. And when it starts moving up remains to be seen and can be debated. But my feeling is that the worst is behind us, and that's primarily is the logic.
All right. The others, pockets that you mentioned, steel, some of the sectors that are more global facing and are affected by the way down global challenges that we're seeing currently. So would you believe that it's going to be more important now to closely watch? While obviously, there has been conversation of how the trade war is not really meaningfully impacting India as an equity market destination, but certain factors will impact one sector more than the other if, this whole issue with the trade war takes an ugly turn.
Well, I think there will be some broader impact as well, because the global investor sentiment is determined, towards emerging markets, is greatly determined by what's happening in China. And for any of these reasons, if the Chinese markets and the outlook, sort of remains weak, India will definitely bear the brunt of that, as a collateral damage. But having said that, I think there are some of the sectors where the which actually could be relative beneficiaries of this trend. And while unfortunately India is not really very big in manufactured product exports, but there are some of the smaller segments like the agrochemicals, chemicals, certain players in that can actually potentially benefit, from these, ongoing sort of US-China war. So that is definitely, one small sector that can be looked at.
Mahesh, how is CLSA or how are you approaching banking right now? Of course, today's news on Ujjivan Equitas notwithstanding, that's a very micro part of the banking space, but their request for diluting norms probably been discarded, and that's why those stocks are reacting. But a bunch of other mid-sized banks have come out with good numbers. Corporate-facing banks are hitting new notes, hitting new highs, and the retail-focused banks, the valuations are going at the highest levels that we've seen in a really long time. What's the argument here?
No, the argument is that, by and large, I would say the financials are still not looking, I mean, even like some of the leading banks, like whether the corporate side or the retail side, are really not looking as expensive relative to its history. I mean, the market, broadly speaking, yes, and there are many other segments that are. But I would say banks, is one space which is actually not looking, very expensive relative to its own history, and definitely not the corporate banks for sure. And we still continue to believe that the market share gain story will continue to, be in favor of the private banks. And historically, what we had seen is that in a falling, rate environment, NBFCs have, posed a great competition for the credit growth, etc., for the banks. But clearly, the NBFCs are also, are on a weak footing as an industry. So I think in that context, the banks and the private banks still appear to be a very attractive bet. And as I mentioned, especially on the corporate banking side, because I think that's the space where you will get very strong earnings growth in FY20 and FY21, obviously because of the low base effect, and large part of the earnings impact over the last couple of years was because of higher NPLs and higher cost of provisioning, both of which have peaked out in our assessment. So I think corporate banks, to my mind, is a no-brainer.
Okay. Just one last question from my side, Mahesh. Are you of the camp that believes that, now mid caps and small caps, their time has come, and depressed valuations, beaten down stocks, start looking at them? Or are you of the camp that believes that, mid caps and small caps, extremely heterogeneous companies, really can't pinpoint and say whether the entire space does well?
No, mid-caps as a category is definitely looking more attractive today than what it was, say, a few months back, because the valuations have moderated, and also many of these are domestic-oriented companies and in the cyclical space, and which is where we continue to remain optimistic. As I said about, like, for example, property developers, there are some of the mid-cap cement names which are looking very, very attractive, to us. But rather than going mid-caps as a general category, I would look at what are the industry verticals that they're operating in, and I would still continue to say the same thing, that some of the expensive consumer-oriented mid-caps also, is something that I would look at with caution, because of the same reason. High valuations and slowing consumption trend doesn't really look that optimistic. But yes, but beyond some of these expensive names in the in the discretionary consumption space, within the mid cap, as I said, some of the others like property developers and cement actually look very attractive.
Okay, Mahesh, just one final question. You guys have been amongst the forefront when it comes to real estate names. Of late, because of this whole NBFC crisis, the value of the collateral itself in certain cases is looking to be a bit inadequate, which is prompting some of the NBFCs to ask some other players to take over the unfinished projects, which would technically mean that the value of the asset by and large comes down, and there is a lot of supply that will start hitting once all of these projects start getting finished. Is there merit in trying to own some of the companies, or would you believe that actually the good companies will prosper much more than what the market is believing right now?
Yeah, so two arguments there, Neeraj. One is that we basically feel that the affordability argument is very strong. Secondly, over the period of last couple of years, we have seen even in the bigger cities, top 7 or top 8 cities, the unsold inventory has come down from about 8 lakh units to close to 6 lakh units as we speak, because the pace of new purchases by customers is more than the pace at which the new projects are coming through. My sense is that even within this current inventory, so-called unsold inventory of 6 lakh units, many of the projects will probably not see the light of the day or get delayed quite a lot because of the reason that you have just mentioned, that some of the developers are facing issues. So, my sense is that the real inventory is not as much as 6 lakh units, first of all. So there are some developers that will clearly, still are financially strong and will be able to go ahead and complete, the project. So I don't think that there is going to be a massive supply. So in fact, if you'll ask me, this NBFC crisis, etc., will actually bring down the new supply, and which will mean that the attractiveness of some of the quality developers which will be delivering on time, actually the value of those projects actually go up. So while we continue to be optimistic on the broader housing market, but to be bullish on the listed property names, one actually doesn't have to take a broader market call. These companies, are definitely gaining market share from the other smaller developers. And, even if you, take a bearish view on the property markets in general, I think some of these companies will do far better than the market. And that's basically is the key call.
One of the early callers in real estate stocks, and it's turned out to be a fabulous call. Mahesh, still bullish, and quite an interesting analysis of how the market call may be very different from how you invest in real estate stocks.
About the housing market
Yes.
also picking up, because with cement could do well. So probably it all just fits in.
Yeah, let's see. Mahesh, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you.
All right. Well, that's the CLSA view. Take a break. On the other side of the break, get you the BNP Paribas view. Manishi, Raychaudhuri would be joining us in just moments from now.